Community Reinvestment Act CRA. CRA is a federal law enacted in 1977 to encourage depository institutions to meet the credit needs of the communities where they are chartered, including low and moderate income neighborhoods. CRA requires federal banking agencies to assess how well each institution fulfills its obligation to these communities. The agencies must consider this performance rating when evaluating application for future approval of bank merger, charters, acquisition, branch opening, and deposit facilities. The Community Reinvestment Act helps ensure that federally insured banks meet the credit needs of the communities in which they are located, consistent with safe and sound banking practices. CRA was one of several laws passed during the late 1960s and 1970s to expand access to credit. Though regulators look at the lending activity and other data in their evaluation, there are no specific benchmark banks have to meet. CRA performance ratings are available online and you can request at local bank branches. Before the Community Reinvestment Act, U.S. banks systematically denied mortgage to Black Americans and other people of color who live in certain areas redlined by a federal government agency called the Homeowners Loan Corporation. The HOLC created maps that classified neighborhoods across the country on a perceived level of lending risk based on information gathered from various sources, including local appraisers, loan officers, city officials, and real estate agents. The neighborhoods were color-coded on maps, with each color representing the area's perceived risk to lender. HOLC deemed the red communities hazardous, describing them as characterized by detrimental influences in pronounced degree, undesirable population, or an infiltration of it. Neighborhoods with a predominantly racial and ethnic minority population were colored red, hence red line. The maps were a tool for widespread racial discrimination. The immediate effect of redlining was the residents in these areas could not access credit to buy or improve housing. However, the long-term effect of redlining persists. 74% of neighborhoods at HOLC colored red more than 80 years ago are low to moderate income neighborhoods today. 64% of the hazardous neighborhoods remain racial and ethnic minority neighborhoods today. 91% of areas colored green in the 1930s remain middle to upper income areas today, and 85% are still predominantly white. Housing discrimination and lending discrimination are illegal. If you think you have been discriminated against based on race, religion, sex, marital status, use of public assistance, national origin, disability, or age, you can file a complaint with the Consumer Financial Protection Bureau or the U.S. Department of Housing and Urban Development. The objective of the Community Reinvestment Act was to strengthen existing law requiring banks to sufficiently address the banking needs of all members of the communities they serve. Three federal regulators, the Office of Comptroller of the Currency, the Federal Deposit Insurance Corporation, and the Federal Reserve Board, share oversight of the CRA. However, the law is chiefly responsible for assessing whether state member banks are fulfilling their obligation under the law. CRA Performance Banking. The Federal Reserve use of 1-5 method to rank a bank performance based on its size and mission. Though a 1995 update to the CRA requires regulators to consider lending and investment data, the evaluation process is somewhat subjective, with no specific quotas that banks have to satisfy. Still, each bank is given one of the following ratings: outstanding, satisfactory, needs to improve, substantial non-compliance. The FDIC maintains an online database where the public can see a particular bank score. Additionally, banks are obliged to provide consumers with their performance evaluation upon request. The CRA applies to FDIC-insured depository institutions, including National Bank, State Chartered Bank, and Saving Association. However, credit union backed by the National Credit Union Share Insurance Fund and other non-bank entities are exempt from the legislation. Thank you.